everyone, welcome to the Allocators podcast. I'm your host, Sheret Ross. And today, I'm joined by Cameron Hyzer, CFO of ZoomInfo. Cameron, thank you for joining us today. Looking forward to hearing the insights about how you allocate capital at ZoomInfo. Before we start, it'd be great to get some background about career and just where you're at today.
Sounds great. Thanks for having me.
So, as someone who has an electrical engineering background, how did you come into finance?
Yeah, that was a long time ago. When I was going to college and looking at colleges, I think I wanted to be an entrepreneur at the time, actually. I was excited about technology and the intersection of technology and business. So I did go get an engineering degree in electrical engineering. I also, at the same time, had a dual degree program with Wharton. So I got a business degree along with that. And, as is the kind of typical twists and turns of figuring out what you want to do, I ended up going into investment banking, which was pitched as a great way to learn about business and to see a whole bunch of different businesses. But that really started me along the path for finance. I obviously, did a bunch of things within investment banking. Then I went to go work for a private equity company, and one of the portfolio companies of the private equity company that I worked for needed a temporary CFO. And so I actually went to Bath, England to be a temporary CFO for a summer. Really enjoyed the operational side of finance and have really been in that, kind of CFO / kind of senior finance position ever since.
And what led you to ZoomInfo from your prior experiences?
Yeah, before ZoomInfo, I worked at a company called Ez Software. We did order management systems for hedge funds and mutual funds. We actually went through a couple iterations of, when I started, we were founder owned, and then we sold to a private equity firm and kind of merged with some assets out of the Bank of New York, and then we spun out and sold to another private equity firm. So through all those kind of sales, I got to know the Carlyle people pretty well. Yeah, they had bid on Ez quite a few times through the history of Ez. And so when we finally sold Ez to SS&C, I naturally wasn't going to stay, as kind of a smaller part of a bigger organization. And they called me up and they said, "You really need to meet Henry." They had just invested in ZoomInfo, and it was Discover.org at the time, but they just invested and were really excited about it. So I met Henry and, was really excited about the opportunity to really help sales teams be more effective and efficient. And that's obviously what ZoomInfo does. Yeah, it's a super company, great people with a great growth trajectory ahead of us. So got excited about it and joined in 2018 and actually moved out to Vancouver, Washington to join the team.
Awesome. Great. In hindsight, it seems you've been there for over 4 years. Is that correct?
It is. Yeah.
So what was the finance department like when you walked in versus what it's like today?
Yeah, that's pretty interesting. When I started, the guys at TA told me that, we invested at this company when it was a $25 million company. And, we haven't really invested into kind of building out the back office kind of capabilities. And that included the finance team. So I think we were, 8 or 12 people, not kind of super focused on the external part of finance. So ultimately raising money and going public and those sort of things. It's very much a kind of bootstrapped company kind of finance organization that just did kind of minimum reporting to kind of help make business decisions, but didn't have, the same depth and kind of focus on everything else that a finance organization needs to do. So my job when I started was to really build the finance organization. We were in the middle of implementing NetSuite at the time. I hired basically an entire new team. I think by the time we went public, there were probably, I think we had close to 65 or 70 people. And, I think half of the people that were here originally had left at that point, but hired new, chief accounting officer, hired a whole bunch of people within the FP&A team, all the SEC reporting, a procurement person, you name it. We really built out the team in order to, operate in a much more controlled environment that you need to when you go public.
And how did that transition, how smooth was that transition going from private to public? Was that your first time doing it?
It was my first time doing it. At Ez, we had gone through the IPO process. So we'd gone through a couple of rounds of comments with the SEC in terms of our S1 document and so forth. But that process ultimately ended in a sale to a private equity firm. So it was the first time actually kind of getting through the other end of going public. It's anytime you go through that, it's a lot of work. It's a lot of change. I think we did really well in terms of the smoothness of it. We actually, we went public basically a year and a half after I started. So starting from zero to, actually going public, it was kind of a sprint to get to that point. But the interesting thing is, it's not like that's the end point. That's really the beginning of our relationship with the current investors that we have. So it was a kind of a sprint to get into the starting gate of being public. And then, we continued to kind of grow and build out more and more functionality and capabilities and back office capabilities from there.
So I'm just, thinking about fast forwarding to today. How are you thinking about capital allocation going into this year and into next year?
Yeah, so we're always focused on, capital allocation and what we can do. The great thing about ZoomInfo is that we are fairly cash flow generative. So, we generate a fair amount of cash, day after day, week after week. So, it's really a question of what's the best use of that cash as we go forward. Certainly in today's environment, there's a premium to having cash in an uncertain economic environment. So we do, continue to hold on to our cash, at least some of it. And I think over time, we've been very successful acquiring companies and integrating those into the platform. So we continue to look for great opportunities to, build value for our customers and for our shareholders through, acquisitions. And then, about a month ago, we also announced that we're beginning a share repurchase program. So we've started to repurchase, some of our shares on the open market as well, in order to return some of the capital that we generate to shareholders. And so that'll be a balance that we continue to focus on as we continue to grow and generate more cash flow.
So looking at this year, how was the budget design process this year compared to previous years, just given the economy and how things are trending in the macro environment?
Yeah, certainly this year has been a tougher year, and we kind of walked into it knowing that. So we certainly injected, additional conservatism into how we thought about the budget. And, a number of our customers are in the software space and, other places. And those customers have been, fairly materially impacted by the current economic environment. So, we certainly had a much greater level of conservatism in terms of how we think about the budget. We've, essentially assumed that a kind of tough macro environment continues through the entire year. And, as a result of that, I think, we're, much more cautious about hiring and where we're investing in the business, but still very focused on making sure that we're investing in the right things to, drive future value. And so for us, that means, probably doing fewer things, but doing those things really well and leaning in hard to making sure that they're successful and drive value out in the future.
And has the realities of Q1 forecast somewhat adjusted kind of go forward budget, or was it somewhat on plan to what your expectations were?
Yeah, and I think it was largely on plan to what the expectations were.
Cool. Well, I'm kind of curious to learn a bit more about how ZoomInfo works internally. Like, I know how we buy software usually, like when we bought ZoomInfo, it usually comes down to a CFO or C-suite level decision. It would be interesting for you to walk us through maybe the last time ZoomInfo made a decently sized software purchase internally.
Yeah, we're always focused on what's the business case for any software that we're buying. And I don't know that I get involved in every software purchase. We have a procurement team and other folks that are super focused on that. But I think the great thing about ZoomInfo is that the entire company is focused on how do we continue to be efficient with what we do. So we're very acclimated to really creating that business case, defining what we think we're going to get out of a particular purchase. Most software is about one of two things. It's either about generating more revenue, or it's about kind of cutting costs or improving quality of what we do within the organization. So when we think about that, it really is, okay, where do we think we're going to be able to generate revenue? What do we think are realistic expectations for that? And therefore there's a return. And then, certainly when we think about efficiency, it's also about what can we do better? How can we do it better? How can something, help us scale the organization? And so, that scaling and efficiency is also something that we aim to define and then make sure that there's a solid return on the software that we're purchasing.
Yeah, makes sense. And I guess it also just influences your M&A strategy somewhat heading into the next couple of years. Is just perhaps there's more opportunities that are coming up that wouldn't have had the chance historically. Is the team seeing kind of new opportunities present themselves, or is it still too early to really know?
Yeah, it's still pretty early. I think we're very focused on making sure that we're deploying our, focus on the business, just because there's so much opportunity for us to continue to grow and, really drive value for our customers. But, over time, I'm certain that there will be, opportunities that, where we can really add value to customers and to our shareholders. Right now, I would actually tell you that I think the bid-ask spread, if you think about that, of what private companies are looking for, because most of the companies that we, acquire, more private than public, I think it's starting to come in a little, but it's still wider than I think you would have seen in history. And so, that tells me that there's, not a big rush to go out and, really focus on acquisitions in the immediate term. But certainly as we get, further down the road and, in the medium to long term, I'm sure there will be some good opportunities for us.
Got it. Okay. So if you have a crystal ball heading into next year, where do you think the biggest pivot is going to be from a capital allocation strategy? And with that, where do you think interest rates are going?
Yeah, my crystal ball is not as clear as it perhaps could be. From a capital allocation perspective, I think that every company needs to kind of think about that with respect to their own needs and where their growth potential is. Certainly, I don't know when the economic environment is going to stabilize or improve, but I know that it will at some point. At least I've been through a couple economic cycles, and in the depths of it, it looks really bad. And, at some point you come out the other end and things stabilize. For us, that's all about buying behavior and so forth. So, when we come out the other end, our focus is really on making sure that we're really well positioned to take advantage of that. And so, in the short term, that means continuing to build sales capacity, continuing to kind of focus on efficiency. And then, when we come out the other end, we'll want to continue to invest into the business and accelerate as a result of that. In terms of capital allocation, because we're, fairly cash flow generative, I'm not super worried about, continuing to invest in the business. I'm going to show a little bit of operating leverage in either event. And so we'll, focus on other acquisition opportunities or opportunities to, repurchase our stock as we, go through that. From an interest rate perspective, I don't know that I know any better than the market. Certainly the yield curves would tell you that at some point interest rates are going to come down. I think the current yield curve is probably towards the end of the year, or second half, they, peak and then, start to come down. But I generally, don't try to bet on interest rates going one way or the other. And because I, run a capital light business, I don't have to worry about it.
Awesome. Thanks for the conversation and appreciate the insights. That's all the time we have for today. This is Sheret Ross. Thank you for joining us on the Allocators. Thank you for joining us on this episode of the Allocators. Join us next week for a new discussion where we get inside the mind of a financial decision maker. I'm Sheret Ross. See you next time.